All right, well, let's start here. So coming out of the pandemic, which is 2020, at that point in time, the states were flooded with cash because the Fed was printing money and pushing a lot of money to states. And the state general funds have declined across the board in 2025, and it's the first time since 2011. So state budgets are not doing very well, and it's because, again, this federal pandemic aid has completely dried up. And with the One Big Beautiful Bill Act, Medicaid and other federal supported really income streams have disappeared. And then also tax cuts, which are now been extended to the One Big Beautiful Bill Act, we're going to talk about that, are also decreasing the revenue side. So states' budgets have ballooned because, like everyone, when the money's there, they spend it, they light it on fire. But now the revenue's not coming in. So a table that we're going to put up here, some states that are in distress. So New York, they've got a $34 billion cumulative budget gap over the next 4 years. So Mamdani just came out and said specifically New York City has a huge shortfall that he's working through and wants to increase some taxes on. Illinois, $3.2 billion deficit in 2026 alone, growing to $5 billion by fiscal year 2030. So that's annual. Washington State, $12 billion over 4 years. And California just has what we're calling a structural deficit. So a lot of questions on California's true deficit and gap because they're not marked to market on their pension liabilities. And there's some claims that could be tens of billions of dollars of pension liabilities that are not, again, getting marked to market. So a lot of issues here. Balance sheet's not looking good.
Dum.
What are your thoughts here? You know, if you were governor of a state for a day, how do you start fixing these problems?
Yeah. Interesting. The biggest contributor to the big heavy inflation that we had a few years ago was really because of the government spending in reaction to COVID. And there was way too much government spending. And then what did consumers do with the extra money? They spent it. What did states do with the extra money? They spent it. And the biggest problem with any government is that they end up spending and not thinking about the future. And unfortunately, the way people get elected in this country is based on what can you do for me today, not what is the country going to be like or what is my state going to be like in 10 years. I don't know how we fix that, but definitely there's no fiscal oversight and there's no financial responsibility to a large degree in the states you just mentioned and in the federal government. You know, I've always criticized both parties for not really being financially smart and financially fiscal. And when you overspend, there are ramifications. One of the good things about the states is states are limited because at some point they run out of money, and that's where we're seeing these problems, whereas the federal government can print more money. So we can kick the can down the road as a government federally much easier than as a state. So back to your question, what would I do if I was running one of these states? Well, the first thing you have to do is get out, sharpen your pencil, and start cutting costs, because you cannot tax your way out of these problems at this magnitude. The only way out is by cutting expenses, which is the one thing that governments and bureaucracies resist with every fiber in their being, is to cut expenses. But that's the only way. And we'll talk a little bit about taxation, but taxation also reduces economic growth. And taxation, you end up, especially in states, people leave your state if you tax them too much.
Yep. Well, you hit the nail on the head in terms of what are all these states doing, or cities. They're going to increase taxes. And so California is really coming out with the first billionaire tax, or the wealth tax, which is going to be a very interesting first of its kind proposal. And what's interesting is this would be a one-time 5% wealth tax on the 255 or so billionaires that are in California, and it was retroactive to January 1st, 2026. So if it hits the ballot, it needs to get the signatures to get the ballot, then it needs to pass in November of 2026. It'll be retro to January 1st, 2026. So already Peter Thiel, David Sachs, there's a lot of billionaires, the Google guys, they left also to get to Florida or Texas, or just to get out of California, because obviously paying 5% of your wealth on things that are most likely illiquid or not easily marketable is very challenging. And one thing that makes this even more interesting is like why the Google guys would have been really penalized even more is that if you have voting shares, you multiply that by 5 times. So it could be up to a 25% tax on your voting shares. And since the Google guys have the super voting shares, it would have been 25% is my understanding on the value of their Google stock, which is just asinine to think about. And that's why they had to get out before 2026.
Yeah, there was a lot of moving happening in December of last year. It's amazing that this is actually potentially going to pass, because to me, when you look at the Constitution, not only the federal government, but of the states as well. This looks like they're absconding with people's property. I mean, that's what it looks like.
Mm-hmm.
And there's no way, if you study the founding of our country, that the founding fathers would have been okay with someone just saying, hey, you have a lot of money. We don't have enough. Let's just go take some of yours. And that's what it really is. It's not like income tax that was passed in, what was that, 1912 or 1913, 1914? It was one of those years. Early 1900s. Before that, no one was income taxed in this nation. And that also would have been against the framers of the Constitution. However, it's been pretty clear that you can tax things like income, you can tax things like capital gains, but it's hard to tax things that have not had a taxable event. You know, you just have all this property, you're not selling anything, and then all of a sudden you have to pay a tax on your net worth. It's hard to believe. And definitely the billionaires have spoken and said that this will be in a long, drawn-out court battle if this passes and if they try to extract this money from these billionaires.
Yep. And California's already at 13.3%, highest marginal rate, up to 14.4 if you make over $1 million through like W-2 and earned income. So they're already at the high end of the scale.
Yeah,
but
if taxation worked, why wouldn't the highest tax states have the best financial condition in their state? And
Yep.
they don't.
It's interesting. I mean, and but not to outdo California, New York with the new mayor, Mamdani, which is controversial, right? Him pursuing socialism here. He's got a $12 billion budget shortfall. He wants to increase New York City's top income tax rate from 3.9 to 5.9. So this would be those top earners. And that would combine state and city, put them at 16.8%.
Wow.
Slap that on top of a 37% federal bracket, and you're now about 54%. Now, that doesn't include your payroll taxes. So if you include your payroll taxes, you're over 60% of those wages are going out the door in taxation.
And that's also not including property taxes, sales taxes, gas taxes, everything else you pay. If you
Yep.
added it up, those doing very well business owners, which is who we serve, they could be paying 70, 75%, 80% of what they make through all the combined taxes that they pay, which is, it's disturbing to
Yep.
see that.
Yep. And so we got a chart here we're going to put up. This data is from 2023, but it stays pretty true. But less than 1% of New York City filers, which is those earning over $1 million per year, which is the millionaires, the green part of the pie here, they pay 41% of the total taxes. So less than 1% pays 41% of the taxes. All other taxpayers make up 59%. So there's sometimes talk about the rich don't pay their fair share, or we do not have a progressive tax system, but I think those are just political narratives, and there's numbers that substantiate that's not the fact when less than 1% are paying 41% of the taxes.
Absolutely.
In New York City.
Well,
here.
federally, about half of taxpayers pay zero.
Right.
And then you've got the top 1% pays about 40%, the top 10% pays about 60%, the top 25% pays about 90% of all the taxes. That's pretty close to the numbers. They vary a little bit every year. And that's where, I always say for high income earners, when people say they don't pay their fair share, no, they pay way more than their fair share if you're looking at it from that perspective. And at some point, the people who drive the economy and create the jobs should be allowed to keep more of what they make and stimulate the economy.
Yep.
Just my thoughts.
Yep. Well, hey, if you're in this high tax state, these high tax states, the state and local tax burden is likely going up, not down, because those states are being mismanaged. And I think the other piece is the value proposition of these high tax states is eroding very quickly. New York City found that only 34% of New Yorkers rate quality of life as good or excellent. So why, at a certain point you ask, why am I paying such premiums to live in a place that maybe doesn't have the same quality of life as you once had? And I think it's interesting if we extrapolate this out over 3, 5, 10 years. I remember several years ago, really pre-COVID, we had a substantial amount of entrepreneurs, clients that were in California. I know of one that is still in California. Everyone else has gone to Florida, Nashville, Phoenix, Scottsdale, Austin, right? I mean, and it's not a coincidence they're flying away from those into lower tax states. And also, I think, obviously, given the situation of COVID and the lockdowns, that was a big forcing function. But I feel like the trend's already there. The money, the jobs. Now they're kind of going to be gutting the billionaires and all of the job creation. And now, if you're an entrepreneur and you're taking on venture capital money, do you want to build in the Bay Area, right? Because if you know that if you do hit it big, you're going to then now start having to pay allegedly 5% one time, but we know that that's just the start, and they're just going to keep coming back and lower the amounts. It's not going to be the billionaire tax. It'll be the 100 millionaire tax, and it'll be the millionaire tax, and it'll be the, you have over 100 grand tax. So I think it'll be very interesting to see the haves and have-nots over the next 5 to 10 years, and this could be like a boom for Texas and Florida and some of these other business-friendly states.
Absolutely. Already has been. And, when I meet an entrepreneur in California making a lot of money, let me do your tax planning. Number one, move.
Yeah.
That's like the easiest thing you can do. And unfortunately, higher taxes don't mean better fiscal responsibility. It reminds me of, if someone's kid runs up a credit card bill and then comes home and says, let's say a 25-year-old, Mom, Dad, I ran up this credit card bill. Will you pay it off? And they do. Guess what happens a couple years later? Kid comes back with another huge credit card bill. Because until you're responsible with money, giving them more money is not going to help solve the problem. And that's what the states are doing, just trying to get more money when they haven't fixed the problem of overspending, which really is what's driving this.
Yeah.